Good morning, viewers. It's Wednesday morning, May 7th, 2025, and I'm your host, Sunil Thakker of Sunny Talks Money. Welcome to ST Money's 7 a.m. early morning news, where we provide you the latest, concise, and precise stock market wrap with accurate figures and numbers. Market jitters over trade are back. Stock indices declined on Tuesday, a day after Dow Industrials and the S&P 500 both snapped 9-day winning streaks. US stocks were lower for a second straight session on Tuesday as comments from US President Donald Trump and Treasury Secretary Scott Bessent provided little clarity to the timeline for any trade deals. Wall Street's risk-off mode prevailed in the run-up to the Federal Reserve decision, with stocks falling and bonds rising as President Donald Trump's tariff remark failed to ease worries that his trade war will cause economic damage. After almost wiping out losses, the S&P 500 closed with a drop of almost 1%. Trump said he would prescribe tariff levels and trade concessions for partners looking to avoid higher duties, appearing to move away from the idea that he would engage in back and forth negotiations. Trump said he and top administration officials will review potential trade deals over the next 2 weeks to decide which ones to accept. In addition, Trump met with Canadian Prime Minister Mark Carney for the first time, which yielded no immediate results. The Canadian Prime Minister met with President Trump at the White House, saying his country isn't for sale and pushing back on the suggestion that Canada could be annexed by US to become its 51st state. While EU is also not going to be easy here, and after this meeting with Canada, even it seems Canada will be a stiff stance. Still, the big wild card is China. China is the big one, and certainly they are going to be very tough negotiators. The slide on the stock market continued in the afternoon after this. Stocks opened lower and remained down after a high stakes meeting between the two leaders got off to a cordial start, with investors still nervous about the impact of widespread US tariffs and a lack of announced trade deals. The Dow Jones Industrial Average fell almost 400 points, or 0.95% to 40,829. The S&P 500 was 0.77% lower to 5,607, while the tech-heavy Nasdaq Composite fell 0.87% to 17,690. On Monday, Ford and Mattel joined companies suspending annual guidance because of tariff-related uncertainty. While Ford is less exposed than some rivals, it estimated tariffs could cut $1.5 billion from a key measure of profit. Huge numbers, the automaker's chief executive said. Shares gained 2.7% on Tuesday. Leo Metal, meanwhile, rose 2.8% after saying it could increase US toy prices. The maker of Barbie dolls and Hot Wheels is bracing for a $270 million tariff hit and will speed up moves to shift manufacturing from China. In contrast, shares of data analytic firm Palantir, among the best S&P performers of the year, tumbled 12% as investors were unimpressed by the company's modest revenue beat and inline profit. Meanwhile, Constellation Energy jumped 10.3% as the best performer on the S&P 500 after its quarterly results, helping to lift the utility sector 1.2%. Reporting results early Tuesday, cereal maker WK Kellogg and hotel chain Marriott International cut their financial forecast, pointing to tariffs and macroeconomic uncertainty. And Clorox shares fell 2.4% after the cleaning products maker updated guidance to include tariff impact. Archer Daniels Midland Company said earnings this year will be at the lower end of its guidance as a difficult crop trading market is complicated by mounting trade and biofuel policy uncertainty. DoorDash Incorporated is buying hospitality tech company 7 Room for $1.2 billion hours after confirming its plan to acquire London-based Deliveroo PLC, underscoring its appetite for aggressive global expansion. In addition, late on Monday, President Trump said that he would announce the size and timing of pharmaceutical tariffs over the next 2 weeks. Healthcare down 2.2%, 2.8% was the worst performing of the 11 major S&P sectors, with Eli Lilly down 5.6% and Moderna off 12.3% among the biggest drags. Vaccine makers such as Vertex Pharmaceuticals, which tumbled 10%, saw additional pressure after an internal email showed the U.S. Food and Drug Administration has named Vinay Prasad, an oncologist who has previously criticized the FDA and was a fierce critic of COVID-19 vaccine and mask mandates, as the director of its Center for Biologics Evaluation and Research. Hims and Hers Health Incorporated reiterated its 2025 revenue forecast after posting better than expected sales for the first quarter, raising questions about the future as it shifts from making copycat weight loss drugs to selling discounted versions of Novo Nordisk's AS's blockbuster Wegovy. Bank of America's corporation individual investor clients snapped up stocks for 21 consecutive weeks through last Friday, the longest buying streak in the firm's data history going back to 2008. The cohort has been piling into U.S. equities through a volatile start to 2025 marked by worries around Trump's tariff regime, building positions in both exchange-traded funds and single stocks. 8 of 11 S&P 500 sectors have net inflows by the group year to date. Meanwhile, new data from Commerce Department showed the trade deficit hit a record high of $140.5 billion in March as Trump's bid to remake global trade prompted a preemptive surge in imports. The figure, which includes both goods and services, topped economists' forecasts. Investors were also tracking the Federal Reserve's policy meeting, which started on Tuesday. While the central bank is expected to hold rates steady, comments Wednesday from Fed Chair Jerome Powell will be scoured for clues on how policymakers view the risk of inflation pressure from tariffs or shortages versus the chance of an economic slowdown. Trade jitters spurred gains in treasuries, which also rose after a solid $42 billion sale of 10-year bonds. Treasury yields fell after a $42 billion sale auction of new 10-year notes attracted strong demand from investors. In one sign of their interest, investors who aren't required to bid at the auction received 91.1% of the total sold, the highest percentage for a 10-year auction since February 2023. The 10-year yield settled around 4.305%. Investors last month grew nervous that foreign exchange for treasuries might crater in the wake of President Trump's tariffs, but a string of solid auctions has helped ease these concerns. Elsewhere in trading, gold prices rose again to a record. Futures for May delivery rose 3% to end at $3,411 a troy ounce, up 30% this year. Oil prices rebounded. WTI rose 3.4% to $59.09 a barrel. The dollar spot index fell 0.3%, and Bitcoin rose 0.8% to $94,952. My take: in this seesaw battle, what do naysayers do? Following a historic winning run for stocks, current valuations leave little room for the recent rally to continue. US assets are not a good place to hide. Investors remain tactically cautious as fundamentals remain dire. Fading upside in a complacent equity market amid continued trade uncertainty, and of course, there's a huge downside economic risk, which are yet to be adequately discounted. The steep recovery in equities over the past 2 weeks is typical of bear market rallies, and the erratic swings mean almost every investor will experience pain whichever direction the market suddenly moves. If the tariff announcements are reversed quickly with little lasting economic damage, this does suggest that the downside risks are limited. Nonetheless, at current valuations, the upside is definitely limited. On one side, there's Trump, who's locked in on tariff. On the other side, there's the Fed, who's locked in on not cutting rates. Well, therein lies another downside. Even when Trump decides to dial back China tariffs by whatever percentage, the stock markets could hit new lows even if he does. This market reality suggests heightened short term volatility is likely to persist, but also presents opportunities for investors with longer term perspectives to capitalize on short term market dislocations. But for the naysayers of uncertainty today, there remain dip buyers in gold and rally sellers in the dollar. That's the wrap for today, my dear viewers. I hope you enjoyed today's wrap. Please do like, share, and subscribe this video as much as possible. If you need to get this wrap each morning at 7 a.m. ET. Please, in the comment section, send in your email, and we will email it to you every morning. In the meantime, happy investing, stay inspired, and remember, it's all about money.